when you think of some of the plans that they put in place, they brought in the first home buyer savings account, which I thought was pretty good, right? It's a deduction from income. You get a tax refund. Yeah. If somebody really wanted to parlay that into an RSP contribution, they could almost get a further refund from that if they look at a longer term view of when they want to buy. So you got this first home savings account. You can put $8,000 over 5 years, 40 grand max.
40 grand, yeah.
You could contribute to an RSP if you just extend your time horizon and expectation of buying a home. I think there are some tools in there for people to get what they want. The only problem is everybody wants it now.
I think the other problem is that it's too far out of reach. Like the first home savings account that you just described, $40,000. They've increased the RRSP to $60,000. If you combine two individuals into a household, which is the most common type of purchaser, that's $200,000.
Plus all the incremental increase to the first home savings account. Right?
Yeah, so, annual. Yeah, so, and then that's not even including like the tax-free savings account that you could also max out. The challenge is like, what household is actually going to save $100,000 per person? Like
in a short period of time.
Well, and it brings you back to the core problem here in Canada, which is that wages aren't keeping up with inflation or with the cost of living or with other places on earth where top talent can choose to live and they can live there much more affordably. House prices are massively inflated when compared to wages. Like on a wage to price basis, we're on par with some of the most expensive places on earth, like Hong Kong and Sydney, and so Bloomberg had this chart that showed which countries have deviated furthest from their pre-COVID affordability. And Canada, compared to pre-COVID affordability, is not the worst. We're actually the fourth worst. The US is the worst, but before COVID, they had a lot of affordability, and we didn't. In 2019, we were already pretty bad.
Yeah.
And so, in order for us to get back to 2019, which was already a stretch
things were starting to slow down already before COVID.
Yeah, like I still maintain that had COVID not happened and had they not dropped interest rates to emergency monetary policy, that like 2017 would have been our long-term peak, and we would have ended up on the same cycle that we're going to end up on anyways, which is big drop, because you saw that big drop in 2017. Like how 2017
have a 4-year delay.
Yeah,
you'd be in the same place.
Exactly. It would have been like the 90s, like 2017, and then a little bit of grind down. 2019 was like it was just flattening out, and I think it would have been flat for another couple of years, and then it slowly would have started to recover.